What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me today. Today is Thursday, and I wanted to go over with you some of these charts from Thursday. Okay, there were a lot of great trading opportunities on my watch list. Congratulations to those of you who were in the Discord who took some really good trades today. All right. And this is sort of also going to recap on what the previous video was talking about. Okay. The master pattern template, how to find that anchor point, how to locate your target, and how to see this template on your charts. All right. So, as a quick reminder, there are only two types of trades. Okay. There's only two templates that we're looking for on a daily basis. There's only two different trades, right? We have a buy model and a sell model. The name of the game is buy low, sell high. All right. And that's all we're looking to do. That's the simple, bare bones basics of the strategy. Okay. And these are the only two templates that exist in our brains. All right. We have a dump and pump template or a pump and dump template. Now you can see if we're on a dump and pump template, on the front side, we're looking for pump and dump in the session that we're trading, okay? And once we've identified a higher high on the inside, and now we think we're on the back side of this move, we are looking for dump and pump types of scenarios in the session that we are trading. And then, of course, the opposite is true for the pump and dump template. On the front side, while we're making higher highs, we're looking for dump and pump types of scenarios in our session. And when we're on the back side, after we've identified a lower low on the inside and this market is shifting, we are looking for pump and dump types of trades in the session that we are trading. Okay, so let's get right into these charts. Here is the DJ 30, all right? And you can see that we have a pump and dump template going into the session. Remember, I told you guys it could be over the course of 3 days, it could be 3 sessions, it could be 3 hours in the session. And I'm just trying to get you to focus on structure, all right? Don't make this too specific and too complicated. All right. It's a generalization. It's a market tendency. When I say 3 sessions, it could just be 2 sessions, right? When I say 3 days, it could be 4 days or 5 days that this forms. All right. But the simple facts remain. All right. So you can see here coming to this chart. Here's the previous day's highs way up here at the top, right? But we put in this sort of triple bottom pattern right here. To me, this is the peak formation low, all right? And we start pumping up from that point, going into the session opening window, all right? We're pumping up right at 9:30. This market goes down, puts in a lower low on the inside, all right, and pumps back up. Now I'm potentially thinking we're on the back side. We're looking at a nice trap and shift type of trade. You can't see it in this screenshot, but this pump up here actually breaks out of the current day's high. So this is the current day's high of the day level, all right? And you'll be taking entries as soon as we break through that EMA and close with that large 5-minute candle right there, all right? Which is what I did. I sized into this trade and I made a decent amount of money today off of just this trade, okay? And then here we're looking at gold. Gold often gives nice opportunities. The template is very clean on gold sometimes, okay? So you can see here, right at the end or the beginning, right at the end of the previous day, right at the beginning of the new day, we put in this peak formation low and we start pumping. So as soon as that happens, as soon as we put in that peak formation low and start pumping up, in my head, I automatically assume this is going to be my target, right? So I start to visualize exactly what I might need to see if we are going to have this nice pump and dump template, all right? So you can see here, we're making higher highs. We go a little higher still here in, the London session. And then this market starts to break down. We put in this right here. There's our first lower low on the inside, which means we're on the back side of this template looking for a pump and dump. And of course, you can see again, we have the micro pump and dump pattern going into the session. And here is a zoomed in look at that, right? Here's our peak formation low. This is a 5-minute chart. We pump up, we go sideways, and then we dump, okay? Pump, coil, dump. This is exactly the type of thing that we are looking for going into the session. Okay. If we dump down just before the session and start to pump, this is automatically my target. All right. And you can see this market pump, coil, dump straight down to the previous day's low of the day level. Okay. And here is Bitcoin. All right. Again, I'm trying to show you something, right? We have dumped down just before the session. So this is not, over the course of 3 sessions or whatever, or maybe 3 days, but I'm showing you going into the session, we have the template forming, all right? We have a high, we have a low. This market puts in this peak formation low and begins to pump. Immediately in my mind, this low becomes the target, okay, for the dump. We pump up, we break through that previous high to the left, right? Just barely, and then dump down. The second 5-minute candle closes below the EMA. Take your entry, stop loss up here somewhere. You can target here or just let it run until you see a reversal pattern. Okay. So this market dumps down to the previous day's low of the day and then prints this W and you're out of the trade somewhere in here, right? Just be happy with taking your little trades. Base hits win games. We don't have to hold this to the opposite side of the weekly range or the monthly range or anything like that. If you know your setup, these are rinse and repeat, okay? This shit is happening all over the place every single week. If you know exactly what you're looking for and you take the trade, you can size in. What are you doing, Judy? Here we're looking at the oil chart, okay? This was also a very nice trade, all right? But it's a little bit different, okay? This is sort of a continuation trade instead of a reversal. So you can see we have this low down here and we start pumping up. We're making higher highs on the day, right? We put in this high and start to dump down going into the session, right? So you can see the small template here for a dump, coil, and pump, right? And then when the session opens, we put in our first higher high on the inside here, pull back into and through that EMA, coil, engulf to the upside, and we go and take out this high, all right? And here we're looking at the British pound US dollar, all right? This trade really started here in Tokyo session. All right, we came up, we broke the high of the previous day, which was an inside day, started to melt down, pulled back going into London, printing an M pattern, retesting those levels from the previous day and dumping down. All right. But then right before the New York session, we put in this low and start to pump up. So automatically, to me, this low becomes the next target. All right. If we're going to continue putting in lower lows, we're looking for pump and dump scenarios, right? So we start to pump up, we start to coil sideways, we get this lower low on the inside, we pump back up into that EMA, coil sideways, and engulf to the downside. You're in that trade right there, and you let it run until you see this reversal pattern. And then here we're looking at the FTSE, okay? This is kind of a weird chart, but you can definitely see the master pattern template at work here, all right? We've put in this low, we've coiled, and then started to explode to the upside, going into the session, all right? Going into the session, we're pumping up. We break through the previous day's high of the day level, engulf and go to the downside. Now you could have waited for this pullback, or you're in there right there. As soon as that first 5-minute candle closes below that EMA, you're in there. Stops at the high of the day. You're targeting that peak formation low that acts as the anchor for the pump. Okay. And then, okay, here's just the bigger look at the DJ30. Okay, we have this larger template in place. We put in this peak formation the previous day. and then we start to pump up into the new day. Okay. And here's our Tokyo high, London lows, New York comes up, takes out those Tokyo highs, trading back into the previous day's high of the day level, retesting that level for the nice dump down. Now, I was targeting here or down here. And as you can see, it didn't quite go down there, right? But I was still able to capitalize on this trade. I closed it as soon as we got this little coil here and started going the other way. I shut my trade down and took the money. All right. NAS sort of started the same way. We had this dump down. I was able to take an entry on the NASDAQ, a smaller entry because I was focused on the DJ, but still, I got in on NASDAQ, held it for 10 minutes or so, closed it out, waited for a pullback like this. I tried to re-enter on a pullback. It pulled back to closing price, looked like it was dumping again. And so I took that second entry, very small size. When I'm re-entering the market, I'm lowering my lot size. But I got stopped out on that trade. I'm sure you guys were watching the chart. It just came right back up. All right. And then I just called it a day after that. Brilliant trades. All right. I made exactly what I needed to make today. I could be done for the week. You know what I mean? But we still got Friday tomorrow. I'm going to be there at the charts. But I hope that this helps you out. I appreciate y'all, man. And until next time, I hope you continue to free your mind.